Martin, good news for the shareholders this morning.
I hope so. I hope they think it's good news. We certainly do.
Can we expect more? I mean, you say that you have a surplus of capital within the group. Is this step one of perhaps a bigger move?
No, I don't think so. I mean, I think this is what we think at this point in time should be returned to shareholders because we have such a surplus of capital. I mean, I would say that a lot of this we still need to talk to the regulator about and make sure they're happy. But we're on our figures, we're pretty happy that we have a sufficient surplus that we can return this level to shareholders very comfortably.
Martin, and other people are going to sort of say, look, this could have been money you set aside. I know that you've obviously just done the Standard Life Aberdeen creating this company, but does this say that you're not interested in acquisitions? Is that my takeaway from this? You're returning capital. No, I don't want to do any more acquisitions.
Yeah, I think we've got a big job to do over the next 2 years, really integrating these two businesses. So far, it's gone very, very well, but there's still a lot of heavy lifting to be done, especially on the technology side, and a lot of the savings come from those sort of efficiencies in an asset management merger. So I think the last thing we would do as a company is do any big M&A transaction at this point in time.
Martin, I know that we spoke to you just a number of days ago, and you were of the view there that the money from Lloyds, this goes back to the February story. You and I and Francine spoke about this. The money from Lloyds was going to go out the door. I think the phrase you used is going. Any further update on that? Is that friendship, in inverted commas, over?
No, I don't think so. I mean, look, we're still in constructive dialogue with Lloyds, and you know what? It's a subject of a dispute over whether we were in material competition. We would obviously love to continue managing Scottish Widows' money going forward, and we are still in discussion over this material competition clause. So it's not gone yet.
Martin, making up the balance, you've got to get out there and you've got to market to get the balance in that is going out the door. How is that going? How is the marketing going for funds at the moment? How competitive is the market?
Yeah, the market's very competitive at the moment, both in terms of fees and in terms of passive becoming a bigger share of the cake. But you know, we're well positioned in the field of alternatives, property, bonds. So we're seeing the shift away from the two companies that merged being perceived as one product companies to much more diverse businesses than they were in the past.
Martin, since we spoke to you last, the world has changed. That's the wonderful thing about financial markets, for good and for bad. Here we are, we're staring down political risk again in Italy. Morgan Stanley say we're underpricing Italian risk in the markets. Would you agree or disagree?
Yeah, I would probably agree, but bear in mind the risk at the moment is nothing like it was during the financial crisis. So I do agree, but also it's not as big a risk as it was in the past.
Would you be encouraging, as you walk out onto the trading floor, I know that you're one of those co-CEOs that actually walks out onto the floor and talks to your peers. Would you be encouraging them or asking them about what protection they're buying? I'd guess saying, look, you want to buy some volatility protection. What would you be saying as you sit in the office and you look at your Bloomberg? How do you look at risk at the moment?
Well, I do look at my Bloomberg. That's the good news, Manus. But look, I'm a great believer in long-term investing and holding for the long term. So I would not be encouraging anyone to do anything that was not for the long term.
Martin, I'm going to let you go after this because I know that you've been very good to speak to us on the hoof, so to speak. What would change your perception of risk? You said, Manus, this is not what it was. This risk in the market is not what it was a number of years ago. Martin, what would change your mind and say, Manus, risk is re-escalating and you really should be warned?
I think it's asset price risk, basically, is the one thing that worries me. But it has been worrying me for a number of years. And we are in a pretty benign economic recovery where I think every country in the world, bar 5 or 6, are growing. And that's what... So it's the old risks that I worry about, asset price and complacency, basically.
Very quickly, any thoughts, guiding thoughts from Mr. Saving over at Deutsche Bank? He's having a tough time. You've weathered a few storms. Top line for Mr. Saving at Deutsche Bank?
I think he's just got to do what's best for the long term again and not worry about the short term.